Right now, over 150,000 crypto traders are staring at blank screens. In less than 24 hours, $744 million vanished into thin air. Bitcoin just tanked to a 7-week low, crashing straight through the critical $71,000 support level. If you think this is just another standard crypto dip, you are completely wrong. Something much bigger is breaking behind the scenes, and the whales are quietly jumping ship. This sudden bloodbath wasn't triggered by a bad tweet or a technical glitch. It started with massive geopolitical shockwaves. Over the weekend, US-Iran tensions escalated to a boiling point. Iran abruptly announced a total blockade of the Strait of Hormuz. Instantly, global markets panicked. Crude oil prices surged by over 7% in a matter of hours. In times of war, mainstream capital runs away from risky assets. Even though Bitcoin is called digital gold, institutional money treated it like a hot potato. The sudden lack of market liquidity left leveraged traders completely exposed. But the geopolitical panic was only the match. The real fuel was an institutional mass exodus. For the last few weeks, massive Bitcoin spot ETFs have been bleeding capital. More than $2.8 billion has been pulled out of these funds. Mainstream Wall Street investors are dumping their shares, forcing ETFs to sell off raw Bitcoin. To make matters worse, a massive narrative just shattered. MicroStrategy, famous for its never sell Bitcoin playbook, just did the unthinkable. Sure, it's a tiny fraction of their massive 840,000 Bitcoin reserve, but to the market, it sent a terrifying psychological signal. The diamond hands are starting to crack. When the selling pressure hit $71,000, the trap snapped shut. Over 152,000 leveraged traders were caught in a brutal long liquidation cascade. In crypto, when you trade with leverage, you borrow money to make bigger bets. But if the price drops too low, the exchange automatically forces a sell-off to cover the debt. This forced selling triggers a domino effect, driving the price down even faster. It creates a loop of absolute panic. Right now, the Crypto Fear and Greed Index has plunged into deep fear at a score of 32. Whales have completely stopped buying, and a massive amount of circulating supply is sitting at a loss. If the upcoming U.S. non-farm payrolls data comes in hotter than expected, Federal Reserve interest rate cuts are completely off the table. If that happens, analysts warn Bitcoin could easily slice straight through 60,000 and plummet toward the $50,000 mark. The market structure has fundamentally shifted, and the next 48 hours will decide the fate of this entire market cycle. Don't get caught on the wrong side of the next liquidation wave.